Okay, yeah, this is Dave Johnston here with Day Trade the Markets, and just wanted to show you a trade that I'm in that I got into a while ago, and I'll show you the exact entry and so forth. Um, and The reason I'm showing this, unfortunately, I wasn't able to start the recording when the trade was first put on, obligated to do some other things, but I just wanted to show you this because we had a members webinar this morning, and we were talking about this particular opportunity and how the market had been setting up after the gap opened lower today. So I'm just going to scroll backwards in time. We're looking at a 1-minute chart, by the way, and of course our software you can use on any time interval, but we're looking at it on a 1-minute chart as far as this chart here today goes. So I'm just going backwards in time, and right about here is when the market opened. So here's the gap open lower. So you can see that. So the market closed up here yesterday, and we gapped down here on the open today. And you can see that it sold off a bit. It did come down to a known support area, in particular with the the ES and the YM. And of course, we look at those markets as well to identify some good opportunities and see how they're working in conjunction with these three different stock indexes. So it did come down to a known area of potential support, and then it formed one of these what we call high velocity moves. And you can see it right here. It's this little dark shaded rectangle. And we know that oftentimes an intraday auction will start or end with a high velocity move. Now in this particular case, you can see that the high velocity move also had within it, in other words, it was made up of a strong level 2, which is this dark green buying bar. And then we had another one right in here, and then another one here, after we had these series here of selling what we call level 1 bars, these light red bars. The high that was made earlier in the day was up over here around 941. And you can see that when the market broke through there, it formed this blue buying bar. Now in our terminology, that's the strongest buying aggression bar that we have. That's what we call a level 3 buying bar. And you can see that it broke above the support from earlier in the day. And then you can see that the subsequent activity after it was all within that vertical move, and did try and dip down and test onto the previous support over here, approximately 941 in this Russel market. You can also see that on a couple of occasions the market did dip down and formed this triangle, as you can see here in dot, and another one right here, and that refers to this selling bar and then to this selling bar. That both of those bars had a lot, they were deceleration as far as the degree of selling in them, because they were selling bars by our definition because they took out its previous bar's low, and they were divergence, which is the dot, meaning that there was more buying in the bar than selling. So these are opportunities for the market to display to us in real time that a lower price has been rejected. In this case, lower price being rejected because these were selling bars that quickly then had their highs taken out. As you can see right here and right here, their highs were taken out pretty quickly. And so also at this time, the emini Russel and the mini Dow were both rallying nicely and had also moved above their earlier highs. And so just moving forward in time here, you can see that the actual trade that we ended up by taking was, we waited in this particular case to see if this buying would continue and take out the high of this buying blue bar. And so just to highlight that, I'm going to go ahead and mark this on here so you can see there's the high of that buying blue bar. And then you can see that during this time period here, the market sort of tested that area, stayed around there for a while, and then rallied higher. And so the trade that we decided to take was to get long on a pullback should the market come in and actually test this high that was formed, this blue bar's high. So you can see down in here, it almost hit it here. We just move a little bit forward in time, and so we're actually filled on this trade right here. And it did bounce up and come back off, and it was interesting to note that when it did come back off and test the low of this dip here, and of course this blue horizontal line is the top of our blue buying level 3 bar that we expect to act as support, that it did dip a little bit below and then rally, tested it once, had a bit of a rally, not much, and then came down and tested it again. And you can see that this bar was also a similar buying bar in that it had a dot and a triangle below it, which means it decelerated and it had divergence, so that we knew that there was more buying in that bar. And then that bar's high was quickly taken out, as you can see right here, and then the market started to have a pretty nice rally higher. So just let me move this arrow out of the way a little bit here. And so just following forward in time, so we're actually filled right here on this particular trade. And you can see it's been rallying nicely ever since. I did put in my stop here at 44, which was below the low of this last or lowest dip as I saw it. And you can see that this dip right here was at a price of 944.2. I put in my stop at 944 after it had dipped like this and then rallied with a good level 2 buying bar. Now the expectation would be that the bar would likely come down and test the low here, but and it could take that out, but we wouldn't want it to take out this intermediate swing low, and that's why the stop was placed right there. So just moving forward in time, we can see that the market has, after that dip, rallied some more. It formed another green buying bar, and this has occurred, I think, since I just started doing this video. And so from that, because of that, we've had this dip here, we've had a bit of a dip here, another dip here, this dip being within this level 1 buying bar. I will now go ahead and adjust my stop up to a couple of ticks below this last dip right here. I could be more aggressive with it and put it just under here, which 945.3, I could go ahead and place it at 945 right in here. But then again, if I did that, I'm right at the low of this last dip. So I've just put it a couple of ticks below there. Now, I'm long this trade, as you can see, with 8 contracts from 942.8 to 944.8 is kind of the lock-in, so that even though, as you can see right on here with the Ninja Trader, it tells me what the current status of the trade is. We're up 2.9 points, for example, right now. If the market were to come back down and stop me out at 944.8, I would make 2.0 or 20 ticks, and of course in the Russell it's $10 per tick. So I'm going to at least know that I'm going to make my 20 ticks per contract should the market dip down and stop me out. Now this other area up here in the 946 area and change, where the market has rallied to today, is an area that the market sold off from pretty hard just the other day. So for example, let me see, I think it was yesterday's high, if I'm not mistaken. Let's see here. Yeah, we had yesterday's, where some really good selling started was about 947 and change. So we've almost made it up there, not quite. We've just underneath 947 is today's high. So if this last little dip holds for, and I usually like to give it about 4 or 5 minutes. If it holds for about 4 or 5 minutes, then I will adjust this stop up a little bit more and place it a couple of ticks below the 945.5. So in other words, if this low holds for, let's say, another 4 or 5 minutes, then in my mind it's telling me that there was some fairly good buying that came in at that time, and in which case I would move my stop up to a couple of ticks below that low. That low's at 945.5, so I'd raise it up to 945.3. And if I do that, that's 5 ticks above where my stop is right now. So, instead of locking in 20 ticks or 2 full points, I'd be locking in 25 ticks or 2.5 points. And, 5 ticks is, it's worth doing because every tick is $10, so that's $50 a contract. And of course, I've got 8 contracts here, so it's certainly worth adjusting that stop once I feel that this little dip down here is likely to hold. And in my view, if it can hold for, I would say about 5 minutes, then I'm probably good to go as far as making the adjustment on that stop on the stop at that time. So we had other trades in here today. We, as I was mentioning earlier, we had a similar trade in the emini S&P, which worked out well because we had a reference area at 49.50 and at 47 going into the day. When the market opened, it opened slightly below 47, or sorry, it opened right around 47, maybe slightly above it actually, dipped a little bit below it, but then quickly came up and used 49.50 as a resistance, and really couldn't get above it and stayed below it for, I think it was about the first it's about the first hour or so, a little longer. And then when it broke through in a similar fashion to what I was just showing you here on the Russell. And so we had the confirmation of the two, and also the ES and the YM and the Russell all really acting in concert here. And then all three of them, I should say, moving higher. So it's nice to have that because it gives you better confidence in the trade, in the ability for the market to go ahead and actually confirm, not just in one stock index, but in the three of them that I think work fairly closely together. In particular, the YM, which is the mini Dow, and the ES, which is the emini S&P. Those two work very, very closely together. I would say that the closest then would be the Russell, and the E-mini Russell is a market that is more volatile. Its average dollar range is probably around twice that of the mini Dow or the E-mini S&P. So in other words, the E-mini S&P and the mini Dow have roughly the same average dollar range. So the Russell offers greater opportunity. Sometimes it follows, sometimes it leads. When the market broke higher today off of the low, it actually did so first in the E-mini S&P. But it was the Russell that was actually rallying from a higher level relative to yesterday. So it sort of had a better underlying strength to it. And then when it broke through its early high with such good confidence, so that blue buying bar that I showed you at the beginning of the video, then it was certainly suggesting that the buyers were in charge and would likely continue to take this market higher. So at any rate, we've been in this trade, or I'm sorry, in this from this dip here, from that formed at around 7 after. Right now we're about 11, 12 after. So I think what I'm going to do is go ahead and make that adjustment on the stop and bring it up to 53. Using this little dip right here to help me manage it. Now you can see this amber area up in here in this green area. When the market first sold off, or gapped lower, I should say, it had formed an area that was suggesting to us that could be resistance, and that's this area here. Today it ranged from 946.1 down to 945.3. So we obviously initially hit it right here into that resistance area. It did back off from there. As you can see, it came down. Then it went up again and eventually worked its way through it. We had a bit of rejection when it got to new highs here for the day and then backed off. But now we've come back into test into this area. So it's another good reason why the stop that I have placed is just right at the low. I guess I could put it even down perhaps another tick, but at least it is in the lower portion of a previous barrier, which seems to be acting right now as a test down to see if the market has actually reached a high enough price to try and push the market lower. Because we know during the auction process that Markets rally to find sellers in the same way that markets move lower to find buyers. Um, Whenever you have bought anything, from the paper or online, and you go to buy a bike, car, whatever it might be, if you go there, um, and the seller really does want to sell, not super motivated, but he's at least somewhat motivated. Let's say he's got a bicycle for sale, and he's selling it for $300, and you come up and offer him, 250, 275, or something like that. If he really does want to sell it, he'll probably, if you say 250, he might say 290 or 280. But there'll be some perhaps negotiation there, and you make the deal, and then that's it. But it doesn't have to be at 300. I mean, if he's really firm and you won't go up, then obviously there's no trade, there's no price negotiated, and that happens in the market sometimes. So markets will always go down. In other words, markets, and the advertising mechanism for a market is price. And as price goes lower, it's advertising for buyers. And eventually it gets low enough that a whole slew of buyers come in and can be very aggressive, and therefore will push the market higher, and can push it higher rapidly and for some time. So it depends how low it gets and how quickly it got down and then decided to move up as to the degree of opportunity in there. And this is one of the things that we take a look at as far as the auction process goes, to see if we can actually make sense of what the market is doing from an auction process standpoint on whatever time frame our analysis and our trade execution takes place. And so once we can combine them together, then we've got a much better opportunity, at least to be making sound decisions that we can learn from. And whenever we've got a good solid framework to base our decision-making process, then it's really a question of us just figuring out, what works, what is our game, what is our best way to profit from this auction. And some people will want to get in and out, quite a bit during the day. Others maybe only once, or perhaps twice, or maybe 5 times, or whatever the case might be. There's all kinds of varieties, flavors of day traders. I would even venture to say that even a swing trader is a day trader the day that he puts on the trade, or he gets out of the trade, because you're acting within the day. And so we have found that our tool is also very beneficial for those traders who are swing traders, because our analysis is from a swing trading standpoint, and even a swing trader wants to get the best possible trade entry location that he or she can get to maximize the potential on any trade that they're looking at. So even if your time frame horizon is longer, i.e. not just within the day time frame, then you still want to take a look within the day time frame to analyze the market and get the best possible trade entry location. So we see this time and time again, because we do follow the auction process in these markets on a day-to-day basis using the market profile, where we'll merge and split them and do various things like that to get a better sense of what we think the market is doing. And then we will drill down in time with our software here once we have confirmation, at least in our own mind, as to what we think the market is doing. Like for today, when we went into the market today, we were in an up auction. Our belief was that the intraday auction is up and has been up for quite some time, and that our preference would be to get on the long side. Now, some of these days that we've had over the past week or so have sold off quite hard, in which case we either didn't make a trade, or if we did make a trade, we would want to get something out of that trade very quickly, because we know that the longer time frame is not on our side. Now, if the intraday dominance is very strong by the sellers, for example, even though the intraday auction is up, then sure, we can still make a short trade, but we would want to be nimble with our management. And if the market hits our first or second objective rather quickly, then we can stay with the trade and just see how it unfolds. And so once we can combine these different features, namely the intraday directional bias of the auction cycle intraday, the auction cycle within the day, known reference points, and then see if those reference points are being tested. If they're failing in their tests, or they're accepting price at these tests, then we've got a really good way of making what we believe to be good, sensible criteria to make our decisions. And it also gives us stuff to learn from because we're not always going to be right, of course, but we can gain some more of the subtleties in the market by analyzing it this way and analyzing our own trade results and how we're looking at the market. Because certainly, in the long run, any trader's performance is based really not so much on how he looks at the market or his specific strategies or tactics, but how he is really truly interacting with the market on an emotional and intelligent basis. So the closer you can get in tune with that and really know your own game, the better off you're going to be as a trader. So we really encourage people when they're using our software, if they have used other techniques in the past, other software or other ways of making sense of the market, not to disband them, but to use them in conjunction with this, because when you can use various features or various tools that you're used to and that do make sense to you, and you can add to them, it's not like just adding 2 and 2 and getting 4. A lot of times you'll add this other component, and your trading could just really skyrocket because in some degree it can kind of be the missing piece. We have certainly found that with some of our students where experienced traders will come along and they've done well, and they'll take a look at this and be able to utilize it, and all of a sudden it's they've just taken their trading to the next level, and it's partly the software, but it's obviously how they're using it. So any of these kind of combination of things can have a synergistic value that is much, much greater than just using it on your own, which kind of ties into the whole idea of why we use context in our trading. We're never looking, even though we look at a 1-minute chart. I know a lot of people say, well, that 1-minute chart, there's just too much noise there. You can't ever make sense of it. Well, I like to use a 1-minute chart, and but I'm using also other time frames. I mean, I'm looking at the 10-minute. I get really good support resistance areas from there. We're also looking at the 30-minute, which is the basis of the market profile. So we're looking at that. And we'll look at the daily charts as well, even the monthly. So we're looking at different time frames to gain as good of perspective as we think we can in what we think the market is doing. And so when we put all of that information into the mixing bowl to try and figure out the best trading decision, we've got a lot of really good objective information to draw from. And then it's really up to us to kind of absorb all that, to kind of develop our market feel and our own feel for the market. Those are two separate things, of course. Then we can go ahead and hopefully make some intelligent trading decisions and use our own innate powers, if you will, to develop our own emotional state that's best can react and interact with the market, which in essence is improving your game. So regardless of what kind of game you play, if you play your game to the best of your ability, you're going to do well. And that's what we think this software can do for pretty well any trader. So I'm just going to let this market sit here. I'm done a lot of talking here. Video's been going on for 20-some minutes, so I think I'll put this video on pause right here and activate it again when we're getting closer to getting stopped out or having to, or wanting to exit the trade. Okay, we've had some, just starting the video back up here again a few minutes later, we've had additional movement higher here, as you can see, and we produced a level 1 buying bar. And this is above the area of this, potential earlier resistance. This resistance which was formed earlier in the day, because it's amber and not red, just means that it's less likely to hold, because our barriers of our trade location zones are green and red. Green for support, as you can see, this area here, and then red is resistance under so-called, in quotes, normal circumstances. but in some occasions, either the support or resistance will be an amber color, meaning sort of watch out. It's not as likely to hold as a green or red area. And as you can see, it initially did hold, as I mentioned earlier in the video here, right in here, and then it did back off down to here, and then it slowly ground its way higher, pulled back in here, which is where I placed the stop based on that, structurally speaking. And now we're not only, we've just taken on a new development here, because you can see the previous high that the market had made above the barrier was up here, and then it pulled back in towards the low of the barrier. And now we've got a good clean move above it we've got this one buying paint bar fully above it, whereas this one straddled it. So this is the first full one above it. Now we've got a second one above it. And so I suspect that it's probably time to go ahead and move this stop. So the low of this move right here at this price I'm looking at right in here, that price is at 946.4. And so I'm thinking now it's time to move this stop up. 946.4. I think what I'll do in this case is move the stop up a couple of ticks below that, 946.2, right about there. And you know, the more the market moves in my favor, I do want to tighten up the stop a little bit, not a tremendous amount. The market could certainly pull back towards the support area here and then have another leg higher, but by the same token, it could turn around and come right in and test to the low of it, and then I would be giving up, you know, another 7 or 8 ticks. And so I've moved it up here to 946.2, and that's from this long trade here where we're long from 942.8. So at least that way I know that, what's that, 3.4. So I'm going to lock in 34 ticks per contract on this one with this kind of stop here now. And maybe if, you know, we're lucky, the market will continue to move higher for the rest of the day. I think it's, you know, it's a real possibility. We're getting back up to a known area of fairly strong resistance in the Russel and in the emini S&P. We're just ticks away from that resistance area in both of those markets. So I think that's another reason to kind of, you know, tighten up this stop as it sits right now. So we'll just leave this stop in here for now, and I'll pause the video here again, and we'll be back shortly. Okay, I just wanted to bring over the emini S&P chart here today to show the comparison between the two. If you recall, on the Russel trade, we had a really good upward movement early in the day, which formed that blue buying bar when it broke above the high. We had a similar event here, except this time it was a green bar, and the level that we had risen from in the emini S&P was from a strong area of support at 47. And as a result, on this particular trade, the way I traded this one was, once this green bar had formed and then settled for just a moment, I put in a buy stop just above it, so right here at 51.50, and was filled right here. So it's in essence the same trade as the Russell, but entered differently. It entered when the market first broke through, instead of waiting for it to break through and then buying on a pullback. So it's the same basic trade, but a different entry technique. This entry technique was a little bit more aggressive. It was go with immediately on the break higher, whereas the Russell was waiting for the break and then entering on the pullback. And you can see on this trade, if I just go forward, that the time that we got entered in the Russell trade was right about this time right in here. My time just after 10 o'clock, which would be about 1:10, 3 hours later Eastern time. But you can see on the emini S&P, it did not drop to that entry price. So as it turned out, it wouldn't have been filled. So I just did my regular 8 contracts and exited half of it in this case because it was an aggressive trade just at a point and a half, and then just let the rest ride. I haven't actually put in a stop on this trade. I've been actually monitoring the Russell, but I do need to put a stop on this trade, and I will do so. And I think the stop I'll place on this particular is we've had this good blue buying bar here. So I'm going to put my stop just a couple of ticks below that blue bar. Well, let me just move forward, make sure I'm right up to time here. It has continued to move up. The 1558.75, and I'll just mark this in here, has been an area that we have been monitoring for quite some time. 1558.75. We tested right to the dot yesterday, and overnight it went a little bit higher. So I'm going to put in my stop just below here this time. I'm going to put it right here. So I'm going to put in a sell stop 4 right there.
Order
So
pending.
there's my sell stop on that, and we'll just see how that works out for the rest of the day. Let's just go on over back to the Russell, move this out of the way. Here is that Russell trade, and you can see where I have it as far as the stop is concerned. So now in both of these markets we do have a nice level 2 selling bar off of the high. We've got a little bit of follow through, but you can see right away right here that we actually formed a divergence and a decel bar immediately thereafter. So certainly the selling that came in there wasn't all that strong. And to be even more, I think, conservative, because it's getting late in the day, the market has approximately 35 minutes left to trade at this point. I think what I will do is go ahead and actually move that stop up a little bit more. I'm going to put it right in there, just 2 ticks below that bar right there at 46.7. My stop is now at 46.5, and we'll see what happens there. And we will hear if that should actually get hit here. And I'll just move my ES chart back in here so you can take a look at that and see how we're doing here on the ES trade. So we do have that level 2 selling bar in here as well. This is a nice stop down here, I believe, but because it's getting late in the day, we've got this buying bar right here. I'm going to go ahead on this and get a little bit more aggressive on my stop and place it up there, I think at 55.75. We're long from 51.50, so that locks in 4.25 points, about $200, $212.50 actually per contract. So we've got 4 of them left, just half the position left on that one. So we'll leave that in and see how that pans out here until the end of the trading session. I'll take that off again. We'll go back to our Russell trade, and we're just monitoring that. We've got a pretty tight stop in here, and if it wasn't quite so late in the day, I'd probably give it a little bit more room to move, but we're down to approximately 35 minutes left in the session right now, so I brought that stop up, I think, as tight as I want to. Even getting stopped out here, I'll still obviously be happy with that trade. So I'm going to pause the video once more, and we'll be back when something new develops. Okay, I thought I'd start this back up again here. It looks like that last high has forced some selling to come in, and it's brought us right back down to right near our stop. We were somewhat fortunate on our last stop, obviously, because we used this as the key, and then we put the stop 2 ticks below it. The market came down and made a 1 tick new low, so it kept us in for that nice little last leg higher. However, it's obviously come back down, and at least is somewhat threatening to stop us out on this particular long trade.
Order filled.
Okay, there we go, 46.50. So worked out to be a good trade, 34 ticks or $340 per contract on that. So we had a nice profit on that trade. Let me bring in the emini S&P. We had moved our stop on this one up to 55.75. and we're holding in on that. I had drawn this line last time at 58.75, which is the known resistance area, and the market could certainly, come in here and stop us. But I'm just giving it that little bit of an extra room. We've come up and hit that area, 58.75, several times in the past, in the recent past, and it would not surprise me if it does eventually, break through there and hold above 58.75. It seems to be that's what the auction wants to do. That's obviously more of a personal opinion, in that I know a lot of what I've been saying here in this video is, but and I'm saying that based on the fact that the market has hit that barrier. We've known about that barrier for a long time, and I've been talking about it here since it's been getting up near it for a couple of weeks or so or more. And it just seems that, if the market comes up, hits a resistance barrier, backs off, hits it again, backs off, hits it again, backs off, pretty soon it's going to go through. That's usually what happens. It's not always the case. Sometimes a barrier will hold, and in other words, cap the market from moving any higher at all, and then just, really give it up, and then, sell off in a pretty strong fashion. That obviously is a possibility, and it's still a possibility. It just seems to me, though, that the odds are greater, based on the kind of structure that we have had, and that we just keep knocking on the door of that 58.75, that it's more likely to move through it and above it and hold above it than it is to really have a major sell-off from here. Of course, there's other features that we can look at as far as whether or not, we're in the throes of potentially a major sell-off or not. But we can, those are other aspects that we can take a look at should the market start to sell below, in particular. Well, the first level that we were looking at as a possibility was in around that 47 to 49 area, and it certainly gave it a good shot this morning. Couldn't hold below there, and then has had this good rally. So in the Russell, I tightened it up a little bit more, just because it's a more volatile market, and it had already moved substantially. And so this one here, I'm 3 ticks below that buying green bar right here, as you can see. So this, really using this bar as a reference, you can see the low of it is right here. I stopped 2 ticks below to be right here. I put it 3 ticks below, just to give a little bit more extra room to see if, in fact, just to give it a real good shot, perhaps the market will have a late day surge and perhaps get right back up through that 58.75. I'm giving it that chance. It's not something I would recommend for anybody to do, but it's just something that if the market really is going to run here, I want to be on board. And I've taken profit on half of the position already, and I've already locked in a good profit on the second half here. So whether it's an extra tick or two, I'm not so concerned about. I'd rather be on board the long side should the market have a really nice rally and break through that resistance barrier up there at 58.75. So that's really my thinking, my philosophy on why I'm giving this stop maybe a little bit more room than I would otherwise. Whereas on the Russell, it tends to be more volatile, and as a result, just tightening up that stop after it had moved up so much, I think was, probably a pretty good idea, at least in my way of thinking, and that's really my reasoning behind it. So now we're looking at 20 some minutes before the close here. So I'm just going to go ahead and pause this video again, and we'll get back to it on new developments. Okay, just starting the video back up here. It looks like we're potentially going to get stopped out here, very close to it anyway, so I thought I'd restart the video. We're still, it's about 8 minutes before the cash closing, and oftentimes if the market is going to do something, it'll do it either right at the cash closing and even sometimes after it. So I'm just kind of, giving the market that possibility by allowing this stop in here. So we'll just see how the market decides to move here in the last few minutes of the trading session. So I'll pause it again here and back shortly. Okay, it looks like we're getting ready to get stopped out here, so we'll just have to monitor this. 51.50 long and 55.75 is a stop, so that's a 4.25 point move on our final second half of the position here. So should we get stopped on this, then still got a nice little profit. So it's just for half the position here, so just still the same though. That's nice. So not a lot other news to report here. Um, this is Day Trade the Markets. This is also a 1 minute chart of the emini S&P, just like we were looking at earlier in the video, the 1 minute chart of the Russel. It's what I in particular like to drill down to for specific trade entry locations and for stop placement. I will use other charts, most notably the 10 minute and the 30 minute in analyzing the market to identify previous areas of support and resistance going into today, and for the directional bias if there is one up or down, maybe sideways. But obviously try to look to see if there's an intraday or day-to-day directional bias within the market. If there really is, then obviously we will look to incorporate that into our trade. Obviously, if the market, in our opinion, has a directional bias of up on an intraday basis, then we're more inclined to trade from the long side during the day. And obviously, that's not always the right thing to do, because sometimes even on an intraday up auction, there will be an individual day or two, or however many, depending on how many days that intraday up auction has been taking place, that there'll be some really good trading opportunities from the short side. And we certainly will take those. If they present themselves with really good structure, aggressive selling, then yes, we'll go on and take that trade. Generally speaking, though, when those trades do occur, what we will do is realize that our management style of that trade has to be a little bit more aggressive. I like to call it trading with a nimble trade management style. I will look to not hold the trade as long, more than likely, and I will also expect the market to reach a reasonable first objective very quickly, usually within 5 minutes, and if it doesn't, I'm probably looking to get out of the trade at a scratch. Just because it's not really doing what I thought it would do. That kind of trade management is probably a good idea in a lot of cases, but even more so in cases where you're so-called swimming upstream. In other words, let's say the intraday auction is up, but the day structure is short. So we're just waiting here towards the end. This little burst of volume that we just had right here is right at the cash closing, and we'll just see if maybe we can go ahead and actually take this market higher once this cash market is closed. Okay, it's closed now, and if this market's going to do anything to the upside, it should do it, pretty darn quickly here. We got our stop in a nice spot. Just one tick below where this little dip has occurred. As I was explaining earlier, decided to place this stop 3 ticks below this level 1 buying bar, and I really did that because of this other action that we had over here in this time frame, where there's a lot of give and take back and forth. And then the market lifted from there. So I just wanted to put it kind of on the underside of that, which is really the other reason why the stop was, the location of that stop was chosen to be right there. So I will pause the video again, and well, maybe not. Maybe it is going to come in and stop us here. So the long from 51.50, our stop here at 55.75. So that's 4.25 points. So a little over $200 per contract on this second half of this position is what we've locked in. It looks like we're probably going to get stopped here, but well, maybe we get lucky and it has another bounce. I don't know. But I just hope that taking a look at this video in real-time trading, that you kind of get a bit of a sense of how you can use, in particular, a couple of different markets. In this case, I actually used 3 of them. Didn't make the
Order filled.
Okay, there we go. We just got stopped. But how you can use the information from related markets to help you get confirmation of trading ideas. You can see how in the emini S&P I went ahead, took that trade on a go with basis, whereas on the Russel I waited for the market to break higher and then entered on the pullback. So it's a more volatile market. That's really the main reason for that. Wanted it to really prove itself more prior to getting in on a trade like that, whereas the ES not so volatile. And I also had what I believe to be a better rejection of support prior to getting long. So anyway, I know this video is kind of long, and I hope you got something out of it. So if you're interested at all in finding out any more about us, you can email us here, and I'll go ahead and just put that in. So there is our email address, our website, DayTradeTheMarkets.com, and you can always contact us at info@DayTradeTheMarkets.com. So I hope you got something out of this. Any questions, don't hesitate in getting a hold of us. We always enjoy hearing from you. Anyway, that'll be it for today. So this was a couple of trades taken today. By the way, is Wednesday, March the 27th, 2013. Just to put it on the record there. And these were trades in the emini S&P and in the emini Russel. So have a good one. Thanks for watching, and bye for now.